Very good morning, everyone. How are you all? Everyone fine? First, is it audible, everyone? Okay. Now, so today we'll have a discussion, full discussion about November 2023 exam question. I hope you have the question paper. If you don't have the question paper, you can download from what? The Google, or I will just give you the PDF of this question paper after the class in the description of the video. Okay. Now, what we'll do, already I have solved the entire question. Already I have solved the entire question. You are not supposed to write anything. We'll discuss from the solution only. So it will be in my handwriting, and I will also give you the PDF of that solved solution. Got this point? So only listen carefully. If you have already written the exam, so just identify uh, whether you have done correct or not, or if you have done mistake, so just identify what type of mistake you have done. It will help you to understand how much marks you can get in the exam. So this is only for understanding that how much marks you can get in exam, so that you are well prepared for the result. Normally what happened that when you don't know the solution, you can't estimate how much marks you can achieve. Understood? So if you know how much marks you can get, you can plan for what? Your next exam properly. Understood what I am saying? Now, this is a suggested solution once again, which may differ from the solution given by ICAI, because sometimes we take some assumption for the solution which might be different from ICAI assumption. So it is quite possible that whatever assumption I have taken, that might be different from ICAI assumption. Got this point? So of course there is a disclaimer in that regard. It is quite possible that whatever solution I am giving, that is not matching with the solution given by the ICAI, but 90% it will be same only. So you can predict on that basis how you have written the exam. Okay, sir, can we start? We will start with the question number 1. Question number 1 was related to consolidation chapter. It was a good question asked in exam. Very good question was asked in exam. Let us read the question. Let us understand the quality of the question. And if you have not written the exam, you are writing in the next attempt. So of course it will help you to understand the what type of question they have asked in the last exam. Correct? So if you have not written the exam, and if you have already done the classes, then also you can listen this entire video. Got this point? So extract a balance sheet of Hammer Limited and his subsidiary Slick Limited as on 31st March 2023 is given below. You can see the two company has been given. One is what? Hammer Limited, the parent company of course, and Slick Limited, subsidiary company. They have given property, plant, equipment, intangible asset, investment, inventory, financial asset, trade receivable, cash and cash equivalent. So I will do the entire discussion. This is a full discussion. So I will discuss each and every point. So it will take time. Okay, got this point? Equity, share capital, other equity, financial liability, borrowing, financial liability, short-term borrowing, bank overdraft, trade payable. Correct. Then they have given some notes to account: property, plant and equipment, plant and machinery, furniture and fittings, intangible asset. Goodwill is already appearing in the balance sheet. Goodwill is already appearing in the balance sheet. Okay, sir. Other equity, general reserve, retained earning, borrowing 8% debenture of rupees 100 each. So they have given 8% debenture of rupees 100 each. Okay, sir. Additional information: Hammer Limited acquired 20,000 equity shares of Slick Limited on 1st April 2022 at a cost of rupees 2,40,000, and further acquired 17,500 equity shares on 1st October 2022 at a cost of rupees itna. Correct? It means it is a question of step acquisition. Understood? Initially they have acquired 20,000. So 20,000 out of how much? Out of check karenge. It is how many shares? You can see it is 5 lakh divided by 10, so 50,000. So initially how many acquired? 20,000 divided by 50,000, how much? Can you calculate? So everyone will calculate with me. Correct? So 20,000 divided by 50,000, how much percentage? Can you say me? Please. So with me also we have face-to-face student also, so they will be answering on everyone behalf. Okay, correct. Batao. How many? It is 40%. So initially they acquired 40%. Then they further acquire 17,500. So 17,500 divided by 50,000, how much? It is 35%. So total it become how much? Total it become how much? 75%. It means NCI will be how much? 25%. This point have you understood? Now the total is coming 2,40,000 plus 1,92,000. Can you give me total? 2,40,000 plus 1,20,500. This is coming how much? 4,32,500. So 4,32,500. So investment is given. To investment this 6,25,000 consists of how much? 4,32,500. This you need to keep in your mind. This you need to keep in your mind. So there are some other investment also. There are some other investment also. Chalega? Yes sir. Point number 1 you have understood. Let us come to point number 2. The 8% debenture of Sleek Limited. So there is some 8% debenture in the books of Sleek Limited, means subsidiary company. Debenture held by Hamel Limited at a nominal value of 35,000. These were acquired by Hamel Limited on 1st Jan 2022 at a cost of rupees 84,000. So can you say this become investment in the books of what? Hamel Limited? And this is a debenture, means borrowing in the books of what? Sleek Limited. It is one type of liability, means intercompany balance. This need to be cancelled. This need to cancel. So borrowing of one company, and of course investment. It is nothing but receivable and payable. One type of what? Monetary item. So monetary item need to be cancelled. Monetary item need to be cancelled. Correct now. So borrowing of one company and investment of other company. So that investment is nothing but financial asset, that is receivable. Correct now. That need to be cancelled or not? Yes, that need to be cancelled. So 84,000 and 35,000. So again, this investment also consists of 85,000. 85,000. Understood? So plus 85,000 if you do, it become how much? 5,17,500. So there are some other investment also. There are some other investment also. Correct? I think borrowing you understood. That need to be cancelled. One point is there that I will explain at when I will do the solution. Then retained earning given Sleek Limited had a credit balance of 75,000 as on 1st April 2022. This is a common information in all consolidation question. Opening balance of retained earning. Then on the date of balance, general reserve has how much? 50,000. The opening balance of general reserve is also given. Sleek Limited had paid 10% on paid up equity share capital out of balance of retained earning on 1st April 2022 for the financial year 2021-22. So you can see it has been given that some dividend was paid during the year out of opening balance. Opening balance means out of pre-acquisition profit. Out of pre-acquisition profit. Then in class I have said if nothing has been given, but it will be paid after acquisition ki before acquisition. After acquisition, so even though it is paid from opening balance, but it will be paid after acquisition of share. So the question is silent regarding that. So my assumption is that this will be paid after which date? After the control is obtained. The control was obtained on 1st October 2022. So it will be paid after 1st October 2022. That is our general assumption in all questions. Whatever we have done in the class. Whatever we have done in the class. So you can't assume that it will be paid before acquisition. You can't assume that. Understood? The entire dividend received by Hamel Limited was credited in the statement of PL account. Similar date will be credited by Hamel Limited, received by Hamel Limited. Okay, sir. Then, as per the resolution dated 28/5/2023, Sleek Limited has allotted bonus shares at a rate of 1 equity shares for every 10 shares held out of general reserve. Out of general reserve. The accounting effect has not been given. Okay, this is a new point which was not given in any question of ICAI study material. The bonus shares has been declared by Sleek Limited, but no journal entry has been done regarding this. No journal entry has been done regarding this. So this is a point where thoda sa explanation required. But if you know the concept of bonus share, you could have done by your own. Let me explain this point when I will do the solution. So one point of bonus shares has been given. Trade receivable of Hamel Limited include bills receivable of rupees 2 lakh drawn upon Sleek Limited. Out of these, bills of 50,000 have been discounted. So bills of 50,000 have been discounted. So whatever has been discounted will not be cancelled. Means we can only cancel to the extent of bill which is not yet discounted. Means we will cancel how much? 2 lakh or 1,50,000. We will cancel 1,50,000 while preparing CVS. During the financial year 2022-23, Hamel Limited purchased goods from Sleek Limited of rupees 25,000 at a sale price of 30,000. So this is downstream transaction ki upstream transaction? Hamel Limited purchase. So this become upstream transaction. You need to calculate unrealized profit. That unrealized profit will be attributable to both parent company and subsidiary company. But out of these 40% of these goods remain unsold on 31st March 2023. It means we need to eliminate only unrealized profit of unsold stock. This point was also very simple point. On 1st October 2022, machinery of Silk Limited was overvalued by 20,000, for which necessary adjustment are to be made. I think if you will not read the question carefully, you will do wrong. What they have said, machinery was overvalued. Overvalued by how much? 20,000. But it is a revaluation gain or revaluation loss on the date of acquisition. Is it gain or loss? Means it is increase or decrease. We need to increase machinery, will decrease machinery. We will decrease it because it is overvalued by 20,000. So, can I say they have given revaluation loss? They have given revaluation loss, for which necessary adjustment are to be made. Depreciation is charged at a rate of 10% per annum. Depreciation is charged at a rate of 10% per annum. Correct? Understood? We can do? Yes, sir. The parent company, that is Hammer Limited, has adopted an accounting policy to measure NCI at fair value. To measure NCI at fair value. So we need to calculate NCI at fair value method, that we can do. Quoted market price applying Ind AS 103. Assume the fair value per equity shares of Silk Limited is 11 on the date when the control of Silk Limited was acquired by Hammer Limited. So on the date of acquisition, what is the fair value of equity shares of Silk Limited? 11 rupees per share. That will be used to calculate value of NCI. You are required to prepare consolidated balance sheet as per Ind AS of Hammer Limited and its subsidiary Silk Limited as on 31st March 2023. This is the entire question. Good question. Now, if we summarize all the questions, so the opening date is 1/4/2022, closing date is 31st March 2023. On 1/4/2022, they acquired 20,000 equity shares at rupees 2,40,000. This was 40% they acquired. 40% they have acquired. Correct. On this date, retained earning and general reserve has been given. And how much 40% holding will be there? Then on 1/10/2022, again they acquired 17,500 equity shares. This become 35%. This become the date of acquisition. So on this date we will calculate goodwill or gain on bargain purchase. We will apply Ind AS 103. This was acquired at 1,92,500. Because it is a step acquisition question, it means we need to also remeasure the previously held equity interest. We need to also remeasure the previously held equity interest. Now on this date, machinery was overvalued by 20,000. So we will decrease it by 20,000. Rate of depreciation is given 10%. Rate of depreciation is given 10%. NCI we need to calculate by using fair value method. Yes, sir. And fair value per equity share is given 11 rupees per share. Now final dividend was paid at a rate of 10% for previous year. It was paid after acquisition, that assumption we have taken. Understood? And on this date, there was some investment acquired in debenture of subsidiary company at a whose nominal value was how much? 35,000. But it was acquired at rupees 84,000. And it was an 8% debenture. 8% debenture. Understood this point? On 28th Feb it is given bonus shares were issued in the ratio 1:10, but no journal entry has been done regarding this. Now just try to understand. If I say bonus shares, if you read this point, what they have given? Bonus shares. It was declared out of general reserve. Out of general reserve. Understood? It means what is the journal entry for bonus shares? Can I say journal entry will what? Reserve and surplus will decrease and equity share capital will increase. That journal entry. So journal entry is what? General reserve account debit to equity share capital. Means can I say actually this bonus shares will not affect the net asset? This bonus share journal entry will not affect net asset. Am I right on? Because no resource have been received. So if you are calculating net asset on the date of acquisition, whether the journal entry of bonus share will affect net asset, it will not affect the net asset. So if they have not done any journal entry, ignore it completely. Correct now. If they would have done the journal entry, then we need to think about that. Because normally it will not affect the net asset. So I will say if no effect has been given, ignore it completely. Ignore it completely. Because can I say it will not affect the net asset either on the date of acquisition or on the date of consolidation. So if no journal entry has been done regarding bonus shares, if no journal entry has been done regarding bonus share, ignore it completely. Ignore it completely. I hope you have understood this point. If you have understood this point, then this question was very easy. Am I right or not? Correct? Once again, I will repeat the point of bonus years. Bonus year, what is journal entry? General reserve account debit to equity share capital. Means it will not affect the net asset either on the date of acquisition or after the date of acquisition, because your equity will remain same. It will decrease one reserve and surplus and increase equity share capital, means your equity will remain same. If your equity will remain same, so SONA we used to prepare. SONA means what? Statement of net assets. We used to prepare by which approach? Equity approach only. Understood this point? Have you understood this point? Am I right or not? Yes, sir. Correct. I think this much you have understood. Now can we start? So first we'll do fair value adjustment on the date of acquisition. So there is a fair value loss of how much? 20,000. If you want to write down, write down. Your choice. Correct. The fair value loss is how much? 20,000. Am I right or not? It is given the question. Now less will do depreciation, additional depreciation for post acquisition period. Less additional depreciation for post acquisition period. So post acquisition period is how many months? So it is 110. So 110 to 31st March, 6 months. So 6 month depreciation will need to calculate. Are you getting what I am saying? Now if you remember, in class we have said that if question is silent and we will use RBM. RBM. If specified in the question, then we'll do by SLM. But can I say for RBM, so you want book value on the date? Book value is not given. So it is not possible to apply what? RBM. So directly can I say from examination point of view, because they have not given information regarding application of what? RBM. So directly we'll calculate 10% of 20,000 only. 10% 20,000. I think most of the students have done this only. 10% 20,000 into 6 by 12 into 6 by 12. So 10% 20,000 into 6 by 12. It will come 1,000. So net decrease on the date of consolidation will be how much? 19,000. First point, have you understood? Any doubt? So this is based on the assumption that we have assumed that this rate of depreciation is on what? On the basis of SLM. This is one assumption we have taken because of lack of information given in the question. Correct? Understood? Yes, sir. Now can I say we'll do analysis of profit? Analysis of profit. So we'll first find out closing balance of retained earning. It is given the question. Closing balance of general reserve, opening balance of retained earning, opening balance of general reserve. That is given the question only. Correct. Then we'll find out profit after appropriation 1,75,000 and 75,000. The difference between closing balance and opening balance. But this become profit after appropriation. So first we'll add back what? Final dividend. So final dividend paid. So 10% of what? Capital. 10% of capital. Capital is given 5 lakh in the balance sheet. If you see the balance sheet, so balance sheet mein capital is given how much? Equity share capital is how much? It is 5 lakh. So 10% of 5 lakh how much? 50,000. So 50,000 will be added. 50,000 will be added. Can I say if the journal entry of bonus year would have been done, then we need to do that elimination also plus bonus year, because reserve and surplus which will decrease now need to increase. Correct now? If journal entry was done, so general reserve will decrease now, but that is also a part of profit of the year. So to calculate profit of the current year, we need to add back bonus year, but journal entry has not been done. Thank you very much. Therefore, ignore it entirely for the solution. So because they have given no effect of bonus year has been given, this question becomes simple. This question becomes simple. So if you have ignored that bonus year in exam completely, means your solution is correct. Are you able to understand what I am saying? So plus bonus year, no adjustment is required. Yes, this become profit of the year, but we want pre-acquisition profit and post-acquisition profit. Pre-acquisition profit and post-acquisition profit. Understood this point? Have you understood this point? Yes, sir. Correct. Any doubt till now? Any doubt till now? Pre-acquisition will be 6 by 12 and post-acquisition will be 6 by 12. So pre-acquisition profit we calculated, post-acquisition profit we calculated. This we have calculated. Understood? Correct. I think in this no doubt. Now we'll prepare statement of net asset. Statement of net asset. So statement of net asset on the date of acquisition and on the date of consolidation. Statement of net asset. So date of acquisition is 1st October 2022 and date of consolidation is 31st March 2023. We'll write down in post column retained earning and general reserve. Remember? Yes, sir. Then we start with equity share capital. So equity share capital opening balance and closing balance are same. Then we write a retained earnings. So retained earning opening balance plus pre-acquisition profit. So opening balance is how much? 75,000. What is the pre-acquisition profit? 1,12,500. That will be added. Yes or no? So that has been added. Correct. Post acquisition profit is how much? 1,12,500. That is 1,12,500. Got this point? Simple. General reserve is what? If you remember, the general reserve is also opening balance plus pre-acquisition profit, that is 37,500. So opening balance 50,000 plus 37,500. This will come. And post acquisition profit we have written, this become the total statement of net asset. So we'll take total will come. Understood? Then we'll do what? Plus minus fair value adjustment. Plus minus fair value adjustment. There is a revaluation loss of 20,000. There is a saving in depreciation 1,000. The net amount is 19,000. Simple. This become what? This become your net asset. But one point is there. If you remember, I have done one question in the class where goodwill was given in the balance sheet. So my question to you, this is net asset including goodwill or excluding goodwill? In this question, net asset is given now. You can see in this goodwill is given in the balance sheet. So 75,000 is the goodwill of which company? Of which company? Subsidiary company. So when you have applied equity approach, so this is the net asset including goodwill or excluding goodwill? Including goodwill, but we want INA excluding goodwill. Remember one question we have done of that nature in class. It means, can I say this is actually INA? Just write down. Means most of the student, I think this point might have forgotten. Might. This point. So this is INA including goodwill. Because can I say goodwill should be calculated as a balancing figure. And NCI, here it is fair value method. But if it is NCI by proportionate share in INA method, it should be INA means what? Excluding or including goodwill? Excluding goodwill. Correct now. So can I say we should minus goodwill? Minus goodwill. So goodwill is coming how much? 75,000. 75,000. Let me understand, if suppose you have forgotten to deduct, whether the answer remains same or not, that I am saying. But if it is Pasina method, then to your answer will be wrong. Fair value method to you might be same. Are you able to understand what I am saying? Bolna rahe? Are you getting what I am saying? So from my point of view, so you want INA excluding goodwill. So you should deduct what? Goodwill. So this becomes excluding goodwill. So this becomes 7,55,000 minus 75,000. How much? 6,80,000. This becomes 1,13,500. This becomes 37,500. And this is 9,06,000. You also check my calculation, because I have already I have solved in the last night only entire paper. Okay. Got it? So there may be some calculation mistake by me also, because I am also human. Got this point? So this become INA excluding goodwill. This become INA excluding goodwill. I hope you are understanding. But from my point of view, most of the student has done up to this. Let's see whether it will affect your answer or not. If it is Pasina method, 100% it will be affected. Why? Because Pasina method to you will take proportionate share of INA, and you want INA what? Excluding goodwill. Bola re? Understood? Yes, sir. Now let us come to goodwill or gain on bargain purchase. Okay. Understood? So I have taken what? Fair value of consideration paid. So fair value of consideration paid to acquire 35% is given 1,92,500 in the question. This is given in the question only. To acquire 35%, how much paid? 1,92,500. Now we'll remeasure the previously had equity interest. Remeasure. So remeasurement will be done as per current market price. Current market price 11 rupees. Current market price 11 rupees. So how many share? 20,000 into 11 will do. So 20,000, 50,000 ka 40% to 11, that will come 2,20,000. Then we'll calculate fair value of NCI. NCI is how much? 25%. So 50,000 ka 25%, how much? 50,000 ka 25% into 11. This will come 1,37,000. This become total consideration. Total consideration. Now just try to understand. 5,50,000. Everyone just try to. 5,50,000. Actually we should do this minus 6,80,000. 6,80,000. How much it is coming? How much? 1,30,000. 1,30,000. Understood? Means, can I say your gain on bargain purchase will be how much? Your gain on bargain purchase become how much? 1,30,000. Or can I say 2,05,000 minus 75,000, which we have not deducted, also coming same? Means, if it is fair value method, even though you have done mistake, your answer will be correct. If it is fair value method, I hope you are understanding, because ultimately 75,000 you have not deducted, that is appearing in the balance sheet. So 75,000 goodwill and 2,05,000 gain, so 2,05,000 capital reserve and goodwill net off करेंगे, set off ना, because either goodwill will come or capital reserve will come. So if suppose you have forgotten, then also your answer become correct, because it is fair value method. But Pasina method, if they would have asked, it would have been wrong. Understood? Have you understood what I am saying? So even though you have not deducted, your answer is coming same. So don't worry. If you have not deducted, don't worry. Are you able to understand? That is one shortcut I will say. In ICAI also sometime by fair value method they don't deduct. But correct approach is this. This is the correct approach. I hope you have understood. Have you understood? If you have not deducted goodwill to find out net asset, don't worry. Ultimately your answer will remain same. Ultimately your answer will remain same. This point have you understood? Have you understood or not? Correct. Yes sir. Or if you have deducted, then also net amount is coming 1,30,000. Chalega. Now we'll calculate remeasurement gain and loss. Remeasurement gain and loss. On previously had equity interest, so fair value is how much? 2,20,000. Carrying amount is given how much? 2,40,000. So there is a loss of what? 20,000, which will be adjusted with profit and loss account, which will be transferred to profit and loss account. So it will be adjusted in retained earning of parent company directly. Understood this point? Yes sir. Then now we'll calculate other equity and NCI. So other equity we have retained earning, general reserve and NCI. We'll first take balance from parent company books. This we can take from balance sheet directly, and NCI whatever we have measured, that we have taken, that is what? 1,37,500. This amount we have taken. This amount we have taken. Chalega? Yes sir. Correct. Now first we'll transfer share in profit or loss as calculated in the previous working note. So we have share in PL. One is 1,13,500. 1,37,500. This will be allocated to parent company NCI based on 75% and 25%. 75% and 25%. So how much retained earning that has been allocated? How much general reserve that has been allocated? Understood this point? Correct. Then there is one dividend received. So dividend paid. So dividend received also. So dividend paid how much? 50,000. But they will receive 40% or 75%? 75%. Why? Because it has been paid. We have assumed it has been paid after acquisition. So 50,000 into 75%. So it is minus 37,000 minus 12,500 from NCI dividend received. This point have you understood? Minus dividend received. Any doubt in this? Then there is one remeasurement loss already we calculated. Remeasurement loss already we calculated. Remeasurement loss 20,000 deducted from what? Retained earning. Then unrealized profit also we need to eliminate. Unrealized profit how much we need to calculate. So I think I have not done any working note for this, but let me explain unrealized profit wala point. It was 25,000 stock was sold at rupees 30,000. So what was the total profit? 10,000. Sorry, total profit was 5,000. Out of 5,000, how much is unsold? 40%. So 5,000 ka 40% how much? That remain unrealized. So 2,000 is unrealized. This 2,000 will be allocated to parent company NCI in 75 and 25 ratio. Why? Because it's upstream transaction, profit belong to what? Subsidiary company that belong to parent and NCI both. Understood this point? Am I right or not? So 5,000 has been allocated to parent company and NCI. To parent company and NCI. This much understood. Now only the last point. This point was not discussed in the class because that type of question was not there in ICAI study material. So this question actually they have taken from old syllabus when there was accounting standard. They have taken from there. Understood? Now you only apply your common sense. So there is a debenture in the books of Creek Limited at a nominal value 35,000. And it is coming in the parent company books at rupees how much? 85,000. Na? At rupees 84,000. So they have purchased at rupees 84,000. Now that debenture become intercompany balance, so that need to be cancelled. But can I say parent company has paid higher amount to acquire a debenture of rupees 35,000, so that become what? Loss on cancellation. Means there is nothing but loss on cancellation. Now it is as simple as that they have invested in the debenture of their group company. So if you remember investment own debenture, so that require cancellation. So if you will cancel your own debenture, ultimately that gain or loss will be also transferred to PL. That gain or loss will be also transferred to PL. So in consolidation, can you see it is nothing but cancellation of investment own debenture. Cancellation of investment in own debenture. Am I right or not? Understood. So that will be cancelled and that will be also adjusted with retained earning. You can see 84,000 minus 35,000 we have done and the loss is coming how much? 49,000. This will be transferred to PL account and from PL account it will be transferred to retained earning. This becomes the total of other equity and NCI. Now we can prepare balance sheet. So balance sheet. Non-current asset will take book value plus book value minus that fair value adjustment minus 19,000. This will come. Correct. Intangible asset. You can see I have taken only goodwill of which company? Only goodwill of which company I have taken? Check करेंगे. I have taken both. That is not correct actually. It should be 1,25,000. ठीक है, okay. So it should be only 1,25,000. 1,25,000. This point have you understood? Correct. Because gain on bargain purchase and goodwill of Creek Limited will be adjusted now. This point have you understood? The balance sheet total will change. Will change it. Now investment. This was the total investment given. Minus 4,32,500. This is the total investment in the equity shares of which company? Creek Limited. That will be cancelled. Minus 84,000. This is the investment in debenture of which company? Creek Limited. That will be also cancelled. Understood? Any doubt? No doubt. Correct. So, and plus we have done the investment in the books of subsidiary company. So investment in the books of subsidiary company is coming 1,25,000. That will come. So this becomes total investment in CBS. Have you understood this point? Have you understood this point? Bolo. Then current asset inventory will do plus plus minus URP. Plus plus minus URP. I think this no explanation required. Then financial asset will do plus plus minus bills receivable which is not yet discounted 1,50,000 intercompany balance, so minus 1,50,000. Cash and cash equivalent no adjustment, balance sheet total will change. Can we change it? So 9,06,000 plus 1,25,000 plus 2,33,500 plus 2,83,000 plus 4,65,000 plus 5 lakh. How much it is coming? 25 lakh. Mine is coming 2,500. Just 1 second, check. What is the total coming? 12,000. Chalo, take it. 12,500. Okay, sir. Understood. Now equity share capital, can I say this equity share capital will remain same? Other equity will change because of that adjustment. So other equity will be now how much? Can you give me PL? PL how much we calculated? So 3,27,125. Write down 3,27,125 plus. Then we write down general reserve 2,28,125. 2,28,125. Then gain on bargain purchase. Can we take net amount if you permit 1,30,000? Means 2,05,000 minus 75,000. I am writing 2,05,000 because that is a point where you need to understand minus 75,000. Goodwill will be adjusted. What is the amount coming now? 685, 250. Understood this point? Simple. The non-current liability borrowing, can I say we'll do plus minus intercompany borrowing, that is 8% debenture to the extent of 35,000. So minus 35,000 will do. So in investment we are removing what? 84,000. But in borrowing we are removing 35,000. The difference will be lost. That loss is automatically adjusted in retained earning. Understood this point? 65,000. Financial liability trade payable plus minus intercompany balance of bills payable. Bills payable, that is 1,50,000. That amount will come. Correct. Borrowing is no adjustment was required. This becomes same total. Can you give me this total now once again? How much it is coming? 10 lakh plus same total is coming. So it means balance sheet tallied. Thank you very much. It is 25 lakh 12,500. Now in this question, I think from my point of view, bonus share was a point which was actually not given in ICAI study material. But can I see if you could have applied your common sense, then you would have done correctly only. Chalo, if suppose that point you have done mistake, all the balance point were known point. That debenture, once again common sense was required. So that 2 points were new point. So if you have done some mistake there, don't worry, you'll be getting some step marking in this. But can I say apart from that, all entire question was simple? Yes. So that will not be disclosed as a contingent liability. So any bills which is already discounted, that will not be cancelled. That will not be a contingent liability now. That will be part of actual liability because they have not disclosed anything in the question. So we are ignoring that contingent liability wala disclosure. Chalega? Yes sir. It will become actual liability. Automatically it has become na. We have cancelled only 1,50,000, 1,50,000. So 50,000 will remain in liability side na. So that is actual liability, will not add again. Got this point? Yes sir. Chalo. So we have understood this question. So this question was of how many marks? Of 20 marks. So can you see, if suppose by bonus shares that one mistake suppose you have done, let us say bonus share one mistake you have done, second the debenture one mistake you have done, but if you have done all points correct, so I will say 12 to pakka milta. On a conservative basis 8 marks delete karo. Okay, understood? But if you have done some other mistake also, then so you will get less than that. Then coming to question number 2a, as per the provision of section 135 of Companies Act 2013 with relevant rules, circular and notification related to corporate social responsibility, discuss the following situation. So this CSR has been dedicated new scheme. But this was the last exam for old scheme, therefore they have asked a question of CSR and that was 100% expected. See, this was the last time, so it was expected 8 mark question they have given, 8 marks. It was not expected that from CSR they will give 8 marks question. But understood what is the mind game? It was deleted from new scheme. So this was the last attempt where it was going to be asked. Now student will think it has been deleted, they will not study this chapter. It is quite possible. And they have asked 8 marks question from this chapter. I was not expected. Okay? Means we were expecting a question will come, but 8 marks we were not knowing. I need to discuss it fast. A company is formed under section 8 of Companies Act 2013 to undertake charitable activities. The management of the company is of the opinion that since all the activities of the company are charitable in the normal course of business, the CSR provision are not applicable. Nalayak, we don't know anything. CSR provision will be applicable to all companies even though it is a charitable companies. Correct? The first point, yes, it is applicable. The accountant is nalayak. Understood? You can write down. C Limited is covered under the provision of Section 135 of Companies Act 2013. The company fulfill all the criteria listed in Section 135 of Companies Act 2013. Okay, sir. It is an holding company H Limited and subsidiary company S Limited. Neither H Limited nor S Limited fulfill the criteria listed in Section 135 of Companies Act 2013. Advice whether H Limited and S Limited are required to comply. No. CSR provision is applicable to each company individually. So if it is applicable to one company, it does not mean it is applicable to their parent company and subsidiary company. For parent company and subsidiary company, we need to apply Section 135 separately. So this, no, it is not applicable. It is not applicable to parent company and subsidiary company of C Limited. For the financial year 2020-21, CBC Limited was within the purview of CSR provision as per Companies Act 2013 as its net profit for the financial year exceed 5 crore. So net profit for the financial year exceed 5 crore. So for the financial year 2021 was within the purview of CSR provision as per Companies Act 2013 as its net profit for the financial year exceed 5 crore. It also satisfies the net worth and turnover criteria. The company duly discharge its CSR obligation in the financial year 21 and 22. Discharge. However, due to adverse market condition during the financial year 2001-2022, the turnover fell below 1000 crore and the company incurred a loss. Its net worth also fell below 500 crore. The company is of the opinion that CSR provision are no longer applicable to it with effect from financial year 2021-22. With effect from 2020-22, can I say for 2021-22 we see the criteria as per preceding year, not as per the current year. So if preceding year all the criteria were satisfied, so it will be satisfied to what? Current means 2021-22. In this regard, the accountant is not correct. Why? Because they are saying CSR provision will not be applicable with effect from financial year 21-22. So it will be applicable for current financial year because already the criteria was satisfied in previous year. Understood this point? Yes, sir. Last point. But you write down properly as per the CSR provision all the points. An office building is constructed exclusively for CSR activities under Section 135 of Companies Act 2013 of the company. The entire expenditure is treated as revenue expenditure and charged to statement of PL. Discuss whether treatment charging cost of construction of aforesaid building in SOP is correct. Yes, it is correct because can I say if you have purchased one building on behalf of CSR activities, so control might not be with you. So that will be considered as revenue expenditure and will be charged to SOPL entirely. Understood? Because the control now does not remain with you and the future economic benefit also will not flow to you because that has been used for which activity? CSR activities. So it will be entirely charged to profit and loss account. Of course, as per Schedule 3, disclosure need to be required in the notes to account for such revenue expenditure. So whether any disclosure as per Schedule 3 of Companies Act required? Yes, it is required. Understood? So I think I have given the answer for 2 na. You can see question number 2 where I have solved 2. You can see I have already said yes, it is correct. Schedule 3 requires the amount of expenditure incurred on CSR activities shall be disclosed by way of notes to SOPL. The notes should also disclose the details with regard to the expenditure incurred in connection with capital asset under CSR project. Understood? Correct. Entire answer. Handwriting is not good. You will be able to understand. I have written very fast. Okay. You are able to understand this handwriting? Yes, sir. So 2A was very simple. I think most of the students have given correct answer for 2A. So it means 8 marks to pakka aata. Even if you have not written properly as per the CSR provision, the 6 marks you will get. Means you need to write them properly. So 8 marks I think you will get if you have written correctly. Then point number B, this was also very simple question related to principal agent as per Ind AS 105. So if you remember, we have done one concept of principal and agent. When it will be principal, when it will be agent, principal will record revenue on gross basis, agent will record revenue on net basis. So similar question is in ICAI study material. So this was not a new question what they have given. XYZ Limited is a sales and marketing company in amusement and entertainment domain. It negotiates and agrees in advance with four famous amusement parks to purchase their ticket for online sales through its payment gateway to the general public. The negotiated rates are a discount when compared with the price of tickets sold directly by amusement park to the general public. XYZ Limited is free to determine its sale price of a ticket. Can I say it indicates it is a principle? Means they have a discretion to set their own prices. Means it is acting like a principle. First, this is one condition which has been satisfied. As a part of the agreement, XYZ Limited will also assist the amusement park or general public with respect to service provided by amusement park to the general public. However, each amusement park will continue to be responsible for fulfilling their obligation associated with the ticket, including the solution to dissatisfied customers. Can I say, if I am saying as per this XYZ Limited, their obligation is to only sell the ticket and to give a right to the customer to enter what? Amusement park. Once they enter, now the obligation to provide services will be with amusement park. Means can I say with this that they have sold a ticket and they have given right to enter the amusement park, their obligation over. So can I say as regard this, the entire performance obligation is done by XYZ Limited to the extent of this only. Correct? Yes, sir. So this condition also satisfied. For XYZ Limited, there is no credit risk as payment is collected from the customer beforehand. However, it carries an inventory risk as the ticket have to be purchased in advance and unsold tickets are lost to XYZ Limited. So who carry inventory loss? Inventory risk XYZ Limited. Therefore, it means they are acting like a principal. Understood? So answer is what? Principal, not agent. I don't know it is whose question paper they have given round in agent, but normally we give round to what correct answer, but I don't know what is his or her answer. I don't know. Correct, we are not going into that, but the correct answer is principal. Correct answer is principal. Correct. So you can see same thing I have written, these three condition I have given which is satisfied, therefore XYZ Limited is a principal, but we need to write down as per Ind AS 115. Correct. Yes sir. Then this was the super easy question asked in exam, which is a question, if you remember, we have done one question of cost to obtain contract and cost to fulfill the contract in Ind AS 115. So cost to obtain contract, if it is incremental, it will be capitalized. If it is not incremental, it will be charged to PL as an expense. Remember, cost to obtain contract. I said till now no question has been asked, but they may ask the question. They have asked the question 6 marks. Means if you have forgotten, you will not be able to write. But if you know 6 marks lollipop question, normally we feel they could just write whenever simple question asked. So when we have not read that question previously, or when we have forgotten that concept, simple question will become complicated. Simple question will become complicated. Correct. So whether the following expense shall form part of cost incurred to obtain a contract, give reason. Correct. So commission paid only upon successful signing of the contract. So again, this is an incremental cost. Commission paid only upon successful signing of the contract, means to obtain the contract, means this is the expense incurred to obtain the contract, therefore this become incremental cost and therefore it will be capitalized. Means this is cost to, yes, it is a cost to obtain the contract, yes. They have asked whether it form part of cost incurred to obtain contract, yes. Means it will be capitalized. Capitalized means it will be recognized as a contract cost asset. Contract cost asset. Remember cost asset. Legal fee for drafting the terms of arrangement agreement. No. Legal fee for drafting means even though you have drafted the agreement, but it is quite possible the contract is not obtained. So this is not incurred to obtain the contract. Means it is not an incremental cost. Okay. Travel expenses of salesperson pitching for a new client contract. This is also no. You only said no. Very good. This is not to obtain the contract. This will be incurred even though contract is not obtained. Salaries of sales people working exclusively on obtaining new client. Batao. No, because can I say they are working to obtain new client, means even though contract not obtained, we need to pay salary. So no. Correct. Bonus based on quarterly sales. In this thora doubt will come. I will discuss. Commission paid to sales manager, which is based on contract obtained. So commission is paid only when contract is obtained. So yes, it will be capitalized. Yes. Now bonus paid on quarterly sales. So I will say there are two viewpoints. One is bonus which is paid quarterly irrespective of contract is obtained. Means on sale, but there is no target sales there. Means when I say there is some target sales, but can I say whatever sales has been done on bonus is paid? So from my point of view, there are two answers. If you see ICAI study material, in ICAI study material they have given yes. Yes, it will be capitalized. So as per ICAI solution, yes. But they have given bonus on sales target in ICAI book. Correct now. But similar question when I read somewhere else, means in some explanation given by ICAI, it is given no. So there are two viewpoints. Yes, it can be capitalized, or it can be what? No also. So depends upon ICAI's suggested answer whether they are considering it as yes or no. As per ICAI study matter, yes. As per some other, means from my viewpoint, it should be no. So will not go against this. Yes is also correct. No is also correct. Let's see what ICAI is giving answer. Okay, na? So bonus based on quarterly sales, I think ICAI will say yes. I think because they will go as per ICAI study material. Chalega? Understood? We will not fight for this. Whatever you have written, let us wait for the ICAI solution. I already said my answer and ICAI suggested solution might be different. Might be different. This you have understood? Huh? Legal fee for drafting. Drafting means what? Normally what happens, first we draft the legal agreement, then we try to obtain the negotiate with the price. So even you have drafted the agreement, it does not mean the contract will be obtained now. So this is the expense which might be incurred without obtaining the contract. So this is not incremental cost. Incremental cost means what? Which will be incurred only when contract is obtained. Only when contract is obtained. Understood? Yes sir? Correct. Now 3A, this is the super question was given. I don't know, I think most of the student has not attempted it only. So 3A, I think most of the student has not attempted it. 90% student I think not attempted it. Those who have attempted, I am doing solution for them. Okay. So a customer product entity, this is a question of 116, totally new question. Entity A Limited lessee enter into a lease agreement with entity B Limited lessor for a dedicated production line to manufacture one of its store brand household product for a period of 3 years. So 3 years become what? Lease term. Entity A Limited has agreed to order a minimum 1 lakh unit per month and to make a payment to entity B Limited as per the following agreed rate. Up to this to was okay. I think every student have understood that maja aa raha hai. Correct. Means up to this was no point. Means you could have done, but after that they have given that information. If you have understood, you can do it. If you do not understand and if you attempt it, quite possible you have wasted much of that time. If you have attempted this question, if you have not attempted, thank you very much. Rupees 240 per unit if the order quantity is between 1 lakh to 1,20,000 units. What is the minimum quantity per month? This much. So if you order between 1 lakh to 1,20,000, the price per unit will be 240 and 246 per unit if the order quantity is between 1,20,000 to 1,50,000 units. My question to this question, that what if I purchase more than 1,50,000? This would give one more point. If order quantity is more than 1,50,000, because they have said 1,20,000 to this, means it is understood it is more than what? 1,20,000. If you are purchasing any quantity more than 1,20,000, the price will be what? 246 per unit. So this much you understood. Means can I say this type of question actually we have done in Ind AS 115, but they have asked in Ind AS 116. Correct? Let's see. Abhi tak we have not read the entire question. As means from my point of view, after this, the most of the students have left this question because this type of question we have not done in class. A totally new question. Got this point? So if you have left, very good. As per the terms of agreement, entity A Limited has an exclusive right to use the production line. So they have an exclusive right to use the production line. Entity B Limited cannot use the specified production line for any other customer. Means can I say substantially all the economic benefit belong to what? Entity A. Correct. It means, can I say, it might be a question where you should decide whether it is a lease contract or not. If you remember identified asset, then there should be right to control, right to direct the asset, right to get substantially all the economic benefit from the use of the asset. Remember? The type of household product is specified in the contract. The type of household product is specified in the contract. Entity A Limited issues the instruction to Entity B about the quantity and the timing of product to be delivered. If the production line is not producing the household product for Entity A, it remain idle. Means if no production is carried on, it will remain idle, means it will not given to any other customer. Entity B Limited operate and maintain the production line on a daily basis. So it can be operated by Entity B. Direction should be of whose? Entity A. So from this question it is understood that it is under the direction of Entity A. Entity A Limited has estimated that manufacturing each unit, Entity B Limited incur an average cost of rupees 195. So average cost of 195. So Entity B incur an average cost of rupees 195 to produce one unit. Further, the observable standalone selling price for the rent of production line is 60 lakh per month. Entity, now I hope you have understood it is a question of lease and non-lease component. There is some lease component, there is some non-lease component. I hope you have understood this point. Entity A Limited incremental borrowing rate at commencement date is 10% per annum. Okay, sir. Entity A Limited conclude that arrangement contain a lease as per Ind AS 116. Thank you very much. Now it is given the question it contain lease, means they will not ask a question about what? About what? Lease, whether it contain or it does not contain lease. So thank you very much. Already given the question, we are not supposed to analyze that. We are not supposed to analyze that, na? It also elect not to apply the practical expedient in para 15 of Ind AS 116 of not to separate the non-lease component from the lease component. If you remember, there was a practical expedient where lessee can elect not to separate lease and non-lease. So it is given they are not applying that practical expedient, means they want to separate lease component and non-lease component for accounting purpose. Accordingly, it separate non-lease component from lease component. You are required to analyze the above and identify lease component and non-lease component. Batao. So I think first point was very easy. There are two components. One lease. Lease means what? The production line. The production line. That facility production line. That asset which has been taken on rent. And second, can I say some production will be, some unit will produce. So non-lease component is nothing but, can I say, job work. There is some job work, means Entity B is producing on behalf of Entity A. Entity B is producing on behalf of Entity A. So Entity A will purchase some units from Entity B. So that is nothing but some unit is produced on behalf of Entity A. On behalf of Entity A. So there are two components. One is what? Production line, lease of production line. Second is what? The, I will say, job work. Job work of some units, of purchase of unit, you can say. Understood? So I think point number 1 to you have understood. Correct. Let me see how to write down the answer. I have written in a brief way so that we can understand. Detail I have not written. You need to write down as per Ind AS 116. That I have not written because I was in writing in fast my answer. Correct. So in the given case, the agreement contain a lease component production line and a non-lease component job work, or you can write down purchase of unit produced. Okay? You can also write down that. Entity A will separate lease and non-lease component and allocate the total consideration. Total consideration is based on minimum quantity. Here's a minimum quantity become in substance fixed payment. So 1 lakh into 240 means 240 lakh become the total consideration, that is minimum quantity. So minimum quantity, can I say, it become total consideration. Are you able to understand what I am saying? Correct. So that should be allocated. Right now we don't know how much quantity will be purchased at the end. But on inception we need to allocate non-lease and lease component based on what? Some estimation. So that become in substance fixed payment. In substance fixed payment which cannot be avoided. So what cannot be avoided? 1 lakh into 240 cannot be avoided. Understood? So total consideration to lease and non-lease company is the ratio of their standalone selling prices. Correct. As entity A is required to purchase a minimum of 1 lakh unit per month at 250 per unit, therefore the total consideration become 240 lakhs. The observable standalone selling price of lease component is given the question 60 lakh, rent is given per month. So the standalone selling price for lease component is given. Standalone selling price of lease component 60 lakh per month has been given. Correct. And can I say it is given that average cost to produce one unit is how much? 190, 195 or 196? 195. 195. It means, can I say entity A is supposed to pay 190 per unit for job work for non-lease component. So that become what? Standalone selling price for job work purpose. Are you getting? So 1 lakh into 195. 1 lakh into 195. So the observable standalone selling price of non-lease component, that is job work charges, that is 1 lakh into 195, that is 1 crore 95 lakh. This is the analysis of lease and non-lease component. Can I say thoda sa, if you would have applied your common sense, you could have done, but I will say chalo theek hai, it is new question. It might happen that you have done some mistake if you have attempted. Got this point? Now 2. At the commencement date of lease, compute and allocate a consideration into lease and non-lease. Can you see if you have done point number 1, now point number 2, point number 3, point number 4 is very easy. Now you can allocate on which basis? Standalone selling price basis. Allocation is very simple. So allocation, lease component, non-lease component 60 lakh, 1 crore 95. This is per month. This is per month. So allocated amount, total consideration is how much? 240 lakh. So this 240 lakh will be allocated in this ratio. I have done some rounding off. Okay. So this is allocated portion of lease. This is allocated portion non-lease. So per annum annual payment will become into 12. This I have done into 12. Understood? So this is annual lease payment. Annual lease payment is what? 67 lakh. 6 crore 77 lakh 65,200. Understood this point? Correct. Now third point, what they have asked, compute the lease liability. In this we are super present value, and they have given what? 2.49 for 3 years. Thank you very much. So multiply by what? 2.49. So what you will multiply? This you will multiply now. Calculate the lease liability. This into this. Annual but not per month. If you are doing per month, once again mistake. This become total lease liability. Means this much lease liability and this much ROU asset will recognize on commencement date. What journal entry? ROU asset account debit to lease liability on commencement date. Understood? Yes. The last point, what they have asked, determine the recognition or treatment of lease component and non-lease component. So treatment of lease component on commencement date. They have asked only for commencement date. Correct. So on commencement date, we need to recognize lease liability and ROU asset of which amount? Of this amount. And can I say amount allocated to non-lease component will be recognized in profit and loss account as and when they are incurred, because that is job work charges. So allocated amount of non-lease component, that is this amount per month, which is attributable to job work charges, recognized in SOPL as and when incurred. Understood? Correct. This was for us a new question, but this point number B was very easy. That is 8 marks. Correct. So this was of how many marks? 8 marks. So 8 marks. Chalo theek hai, if you have done some mistake, but point number B and point number C was super easy. Point number B and point number C was super easy. Let us do point number B. The following details are available for Hydra Limited as on 31st March 2003. Once again, I will say the question drafting has some issue in this. They have written as on 31st March 2003. Correct? As on 31st March 2003. Now, disposal group carrying amount at the reporting date before classification as held for sale. Carrying amount as remeasured immediately before classification as held for sale. Now 31st March 2023 is which date? So it might happen in exam you are confused. Correct. It is quite possible. This is the reporting date now. 31st March 2023 is reporting date. Let us assume. Can I say this may be any date before 31st March 2023 when it was classified as held for sale? This is which date? Carrying amount at a reporting date before classification means this is one thing understood. This is 31st March 2022. Yes or no? Correct. So if you are able to understand, okay. Can I say this information is not at all relevant? Because we'll do remeasurement on the date of classification. So this carrying amount is not at all relevant. Now goodwill given, PP given, building given, investment given, instrument given, inventory given. Once again, building carried at cost. This is also not correct. Building will be carried at cost model, but at depreciated amount. Nah. So chalo theek hai. Will not fight with the question. Will not fight with the question. I think it should be cost model. It should be revaluation model. They want to say that. They want to say that, but will not fight for this. Chalega. Hyder Limited estimated fair value less cost to sale of disposal group is 65 lakh. Once again, 65 lakh on which date? That is not given. So what assumption you will take? On which date? On reporting date? On the date of classification? On which date you will assume? On the reporting date or on the date of classification? On the date of classification we want fair value less cost of disposal. On the date of classification only. So on this date we will assume. I am saying there are some drafting issue. Okay? State as per applicable Ind AS means Ind AS 105. How and what amount of loss should be Hyder Limited recognized? Disposal group before classifying it as held for sale. Also compute the impairment loss if any, and how it should be allocated by Hyder Limited. So okay, you need to find out what. First they must state as per applicable Ind AS how and what amount of loss should Hyder Limited recognize disposal group before classifying it as held for sale. Before classifying it as held for sale means what? Can you will calculate loss on the date of classification? Nah? Before classification? How to calculate before classification? Nothing, no information has been given. So I will say they want to say how much loss you want to calculate on the date of classification. Correct now? Before classification, what you will calculate? Are you able to understand what I am saying? Are you able to understand what I am saying? Also compute the impairment loss if any and how it should be allocated to Hyder Limited. Means they want to say calculate impairment loss on the date of classification and then allocate. Can I say it is very simple? So I think I have done the solution, but where I have done the solution? Yeah, this. So you can see first I have taken carrying amount on the date of classification. I have taken this amount. This all amount I have taken. Correct. We'll make a total of this. This become total carrying amount of disposal group on the date of classification. Compare with the fair value less cost of disposal. This become impairment loss. This impairment loss will first allocated to what? Goodwill. So entire will be allocated goodwill. Then balance is what? 2 lakh. 2 lakh will be allocated to what? PP and building. Not this, not this. Whether it will be allocated to the investment. It will be allocated to investment equity instrument. It will not be allocated to investment equity instrument. For that to Ind AS 109 will be applicable. So it will be allocated to property, plant and equipment and building. Property, plant and equipment and building. In the ratio of their carrying amount, means this carrying amount, that same amount will come. This become total. Then if you want to calculate, because they have not asked revised carrying amount, if you want to calculate, you can calculate. Allocation done 8 marks. Super easy question. But I will say there is some drafting issue. But case smart work is that to understand the question and write down the answer. Correct? Understood? Yes, sir. Then next question. Next question was easy, only same to same question is given in Ind AS 21. I have not solved it, so if you want I can solve it right now. Unlimited is engaged in the business of manufacturing a bottle for both pharmaceutical company and non-pharmaceutical company. Same to same question we have done in Ind AS 21. Same to same. It has a wholly owned subsidiary, H Limited, which is engaged in the business of pharmaceutical. H Limited purchased the pharmaceutical bottle from its parent company. The demand of H Limited is very high, and hence to cater it to its shortfall, H Limited also purchased the bottle from other company. Purchase are made at competitive price. This entire para is not relevant. Now Unlimited is what? Who is Unlimited? Unlimited is a subsidiary of is given now. It has a wholly owned. Acha, N Limited is a parent company and H Limited is what? Subsidiary. देखो, H Limited subsidiary company. Can be dangerous, huh? N Limited sold pharmaceutical bottle to H Limited for euro 24 lakhs on 1st Feb 2023. The cost of this bottle is 1660 lakh in the books of N Limited at a time of sale. As on 31st March 2003, all these bottles were lying in the closing stock in the books of H Limited. Also at 31st March 2023, the entire amount against the supply of this bottle was payable by H Limited. The functional currency of H Limited is euro and N Limited INR. So this become foreign currency transaction for parent company. Following is the additional information given 1st Feb 83, 31st March 85. Provide a journal entry in the books of N Limited and H Limited on transaction date as well as on 31st March 2023. If any, assume NRV of stock was always equal to its cost. Same to same one question we have done, if you remember. Can I solve it? Because this I think I forgot to solve it. So we are doing question number. This is 3 now. 3C. So first, in the books of N Limited and H Limited, what is the date of transaction? Batao. It is 1st Feb 2023. So 1st Feb 2023, N Limited will pass one journal entry H Limited account debit, or you can write on receivable account debit to revenue. To revenue na. It is given 24 lakhs euro. 24 lakhs euro given. Yes sir. Multiplied by 83. Multiplied by 83. So 24 into 83 how much? It is 1992. 1992. Understood? Simple. Here what journal entry will do? Inventory account debit to N Limited. It will be in 24 lakh euro only. So this we are doing in euro and this we are doing in INR. Got this point? Then can I say this company will also pass one more journal entry about cost of sales. So cost of sales to inventory. Cost of sales account debit to inventory. What was the cost of sales? It was given 1660. It is given in the question in INR only given 1660. Correct. Now can I say this is receivable? So this is a monetary item, foreign currency monetary item. This need to be translated by using closing exchange rate as per Ind AS 21. So 83 become how much? 85. So there is an exchange gain. So what journal entry done? H Limited will increase to exchange gain. Exchange gain. How much? It is 24 into how much? 24 into how much? 2 means 48. 48. I think this is done. Correct. Now because this has been done in what? Euro. So for consolidation purpose their financial statement will be translated by using what? Closing exchange rate. So all the assets and liability will be translated by using closing exchange rate. So for translation purpose, the books of H Limited will be translated to inventory will become how much? Inventory will become 24 into 85. 24 into 85 how much? That is 2040. And payable means unlimited. Payable unlimited will be 24 into 85, that is 2040 lakhs. Now in the consolidation book, in consolidation, can I say we need to cancel these two? So you can see this H Limited also become 1992 plus 48. How much it is coming? 1992 plus 20 plus 48 how much? 2040. So this will be cancelled. So what journal entry will be done? Batao. Payable means payable unlimited account debit to receivable H limited, that is 2040 lakhs. Got this point? Correct. And can I say they need to also eliminate unrealized profit? Unrealized profit will be eliminated. So what is the unrealized profit? Can I say unrealized profit will be difference of these two? This is the unrealized profit. So 1992 minus 166 1660. What is the unrealized profit? 332. That is unrealized because entire stocks was in closing stock. So we'll eliminate entire unrealized profit. What journal entry will do? We can do consolidated SOPL or whatever. Means you can do that journal entry also, sales account debit to cost of sales, or you can do consolidated SOPL to what? Stock or inventory. How much? 332. Done. This done. Any doubt? Simple. So can I say even though you attempted to, you are getting 2, there are super easy question. 8 plus, this was for how many marks? It was 8 marks, 4 marks. So 12 marks so you are getting now. If suppose you are not able to do correctly these question, leave it. But 8 plus 4, 12 marks you are getting now. Why you are thinking about 8 marks? Think about 12 marks. This 12 marks was very easy. So with one complicated, they are given 2 lollipop questions. So students think about complicated question, they will leave entire 3. That is not correct. Understood? Chalo, this also done. Let us come to the next. Point number 4. This was a good question. I have received a lot of comment from the student that this effective rate of interest, whatever given, was not correct in the question. So they have given an effective rate of interest. But from my point it is correct. I have already calculated it correct now. So there is no mistake in this. I think you have done some mistake in exam. Let's see what mistake you have done, because a lot of students message me ki ER is not matching, so whether we'll get marks. So I was thinking that yes, ER might be wrong because there may be some clerical mistake in the question. There may be some clerical mistake. Let me explain. Ore Exploration Limited is engaged in the manufacturing of drilling and mining equipment for over last 25 years. The management of the company is planning to expand the manufacturing activities for which funds are needed. On 1st April 2019, to meet out financial requirement, Ore Exploration Limited issued 50,000 compulsory convertible cumulative preference shares (CCCPS) of rupees 100 each. So triple CPS. So compulsory cumulative preference share. My question to you all, it is equity liability of compound financial instrument. They have given also these preference shares carry a coupon rate of 12% per annum and is payable every year. Means preference dividend is what? Payable every year. It is a compound financial instrument which is compulsory convertible. The company share has a substantial profit for the payment of preference dividend. It is given also they have what? Substantial profit, means always dividend is payable only. Under terms of instrument, every 2 preference shares are convertible into 1 equity shares or rupees 100 each at the end of 4th year. It means fixed number of equity shares. It is fixed number of equity shares. So whenever fixed, it will be considered as equity or liability. So whenever compulsory convertible preference shares and it is based on fixed number of equity shares, the principal amount will be considered as equity or liability initially. Equity only fixed number of equity shares. Fixed na? Are bolna re? Correct. The prevailing annual market rate of interest for the similar debt without conversion option is 15% per annum. The transaction cost of completing the issue proceed of the instrument is 3% of proceed. From my point of view, student has done some mistake यहाँ पर. I don't know whether you all remember or not. But what will be the accounting treatment for this transaction cost? So 3% of issue price that we can calculate. So 50,000 into 100 into 3%, it is coming 1,50,000. So 1,50,000, what is the accounting treatment? Batao. It will be allocated to both components in the ratio of their fair value. This was the point. If you have forgotten this, understood? So it might happen most of the students have done mistake in this point. It is quite possible. Then they have given the effective interest rate of 16.60%. You are required to compute the liability and equity. This we can do. Provide a liability ledger account. We can prepare ledger account by using effective interest rate. Pass accounting entry for the whole period, for the entire period. Use the present value factor. So they have given 13% not relevant, 18% not relevant. Only what is relevant? 15% is relevant because that is the market rate of interest. So what you will do? First we'll calculate what? Fair value of equity component and liability component. I have already done the solution. Correct. So calculation of fair value of liability and equity component. Proceed receipt is 50 lakh. Correct. Then less fair value liability component. So can I say only interest portion will take? So 12% of 50 lakh how much? 12% is the contractual rate of interest. So 12% of 50 lakh how much? Into annuity factor. Annuity factor at what rate? So we need to sum total these two, these, this total karo. How much it is coming? This total is coming how much bata? You can't take any other decimal factor. Huh? So what I have taken check karo? 6 lakh into 2.855. This is coming this amount. This become fair value of equity component. Now what is the transaction cost? Transaction cost is 3% of 50 lakh, that is 1,50,000. So the transaction cost will be allocated in the ratio of fair value of equity component to liability and equity component. That allocation we can do. This become net profit. So what will be our first journal entry? Bank account. Bank account how much? There is a bank account will be 48,50,000. To liability how much? 16,61,610. Equity how much? 31,88,390. Now they have asked you to prepare 12% CCPS financial liability account. They have asked only liability account. We'll start with what bank? Then interest will be calculated which rate? 16.60 of this amount. Then what is the payment done every year? 6 lakh. Carried down. You can calculate now. You can do it. You can do it now. Every year. You can see last year it is coming this. What is the what amount you are getting by multiply by 16.60%? 86 107. Now will you fight in exam for this? You want to fight with for this difference? If you are fighting for 5,000 difference means you are wasting your time. Means you need to respect the information given the question. They have given EIR. Now if you are calculating EIR, you are wasting your time. Why to calculate EIR? There can be some approximation done. There may be some approximation done. Why we don't know what approximation they have done. You need to respect the information given the question. So if the difference is coming for 5,000 amount, I think 5,000 difference now. How much difference is there? 5,000 difference. So 5,000 difference I think you should ignore. So of course that much difference may come. Why to worry? In exam you might do 1 second calculation. The 1 second you do, if the same answer is coming, leave na. Go to some other question. So I think here also many students have wasted their time. Why the difference is coming? I think. Correct. Journal entry, very simple. Bank account, 12% CCPS, financial liability, 12% CCPS, equity instrument. Then interest expense to bank difference will be reduced from financial liability. Correct. 4-year journal entry you can do on the basis of ledger account. Then last journal entry what will do when conversion happens? So 12% CCPS equity instrument that will be converted into equity share capital. Now they have given for 1 equity shares will be given. So it is 50,000 into 2 divided by 1 into 1 by 2. It is 25,000 equity share. So 25,000 nominal value it becomes 25 lakh. So difference can we see? We can consider securities premium or we can consider any other reserve and surplus. So as per Ind AS, so they have said what it will be transferred to equity. If you remember this journal entry we are doing as per Companies Act. As per Companies Act. So whatever amount you receive over and above nominal value that can be transferred to securities premium. Understood? Yes sir. This also done. This point number B I am not solving because this is a question of what conceptual framing, conceptual framework chapter. This, if you have attempted, very good. If you have not attempted, see the ICAI study matter here. Okay, so I am not discussing this. Now you can see the only this question was of 14 marks. If you have done correctly, you are getting 14 marks. Financial instrument chapter. बताओ. इसलिए I say 14 marks and they have asked one more question. The 20 marks always they ask the financial instrument chapter. That chapter should be in your hand. 20 marks out of 20 marks you need to score. Then 5A, if you remember in my class I used to say this question I have taken from old syllabus. I don't know whether this type of question will be done or not. We used to take some assumption about annual departure rate. Same question has been asked. Same question means in this attempt they have asked two questions from old scheme. Old scheme means when there was accounting standard. This question though I have taken in class, but that consolidation wala question same to same we have not taken in class. Chalega. So this question though I have taken in class na. A Limited announced a stock appreciation right on 1st February 2020 for each of its employees. The scheme gives the employee the right to claim the cash payment equivalent to an excess of market price of company shares on exercise date over the exercise price of 250 per share in respect of 100 shares. बताओ, it is a question of SAR or ESOP? SAR only, it is given the question only. The SAR is exercisable after 31st March 2023 but before 30th June 2023. The fair value of SAR is this. So they are given 3-year fair value for reassessment. In 2020-21, the company estimates 2% of its employees shall leave the company annually. This was revised to 3% in 2021-22. Actually, 15 employees leave in first year, 10 employees leave in second year, 8 employees leave in third year. The SAR therefore actually vested in 492 employees on 30th June 2023 when SAR was exercised. The intrinsic value is 50 per share. Computed by the fair value method, the SAR expense for the financial year this also provides SAR ledger account from inception till closure. Discuss whether this account is in the nature of liability or equity. So liability only. The account is in the nature of liability. This is 2 marks. You can write down. This question is of how many marks? 8 marks. So I think 1 mark. Balance is for what? 7 marks is for what? Working note. Now in this actually doubt will come. First they have not given number of employees at the beginning. But they have given 15 employees left यहाँ पर, 10 employees left यहाँ पर, 8 employees left यहाँ पर, 492 actually vested. So you can calculate this back calculation. Simple now. Therefore I always say draw the timeline. Correct. Number of shares they have given per employee 100. Exercise price they have given 250. Now annual departure rate they have given 2%, 3%, and this is the fair value of option for each year. Intrinsic value is this. This is the question. Now in this question only doubt will come that this 2% is for how many years? And that's one point we have discussed in the class, because the question is silent whether this 2% is an estimation for remaining vesting period or from the beginning, means for the entire vesting period. Remember, so same question we have done in class. In that question we have done 2 assumptions, means we can assume that this 2% is estimated for entire vesting period, or this 2% is estimated for remaining vesting period. These 2 assumptions can be taken. So I have done solution from both point of view. In exam you can write your own assumption into it. You can write your own assumption. Remember not. So assuming that annual departure rate of employee is estimated for entire vesting period. Remember this point. Then we'll do for first year what? 2%. So minus 2%, minus 2%, minus 2%. Then this actual information is not relevant. 15, 10, 8 is not relevant to estimate the number of employee who is going to vest the option on vesting day. Remember that point. Yes sir. So working is what? 525 into 98%, 98%, 98%. Then into 100 number of options. Then into fair value into 1 by 3 for the first year. We have done rounding off in number of employees. Remember that point. Then second year 525, it is given 2% was revised to 3%. So I say 2% is for the entire vesting period. So 3% will be also for entire vesting period, if you remember. So 525 into 97% into 97% into 97% into 100 into fair value into 2 by 3. We'll do cumulative and we will calculate the expense. Last year it is 492 employee only. So last year automatically it will be corrected. 492 into 100 into fair value into 3 by 3. Then during exercise period the intrinsic value become 50. It means you have calculated this much liability, but actually you need to pay this much, so the difference will be also charged to EB expense. Got this point? Any difference will be also charged to what? EB expense only. The second assumption what you can take, that assuming that annual departure rate estimated is for remaining vesting period, means the first year it is for second year and third year. Second year estimate is only for third year. In that case, first year it will be 525 minus actual employee left minus 15 into 98% into 98%. Remember? Then into 100 into 42 into 1 by 3. This way you can do. Then second it will be 525 minus actual of 1 year minus actual of second year. So minus 50 minus 10, then into 97%. We are expecting 3% will leave in third year. Into 100 into 46 into 2 by 3. Then this year it will remain same only. I have not prepared ledger account because ledger account you are champion, you can do by your own. Understood. So this was also super easy question, but it was based on assumption. What assumption you have taken, you should write down. You should write down the assumption. If you have not written the assumption, then they will give you marks as per ICAI solution. If you write assumption now, so they will think, acha, this assumption can also be taken. This assumption can be taken, so your answer is correct as per your assumption. You should write down the assumption whatever you have taken. Correct? Yes, sir. This B so super 8 marks means I don't know. ICAI love this Ind AS 108 chapter. Ind AS 108 every attempt they are asking some question, and that segment reporting. Remember segment report we prepared lollipop question, but this was of how many marks? 8 marks. So you get 8 out of 8 if you have done correctly, and I think most of the students have done correctly in this. Okay. This also super easy 8 out of 8. What was the question? Hemon Limited has 3 segment HMD. The following information provided for the year ended 31st March 2003. Sales to M, inter-segment sale. Sales to D, inter-segment sale. Other sales, external sale. Other sales, export at external sale. Operating profit before tax. Reallocated cost of head office, interest cost, fixed asset, net current asset, long-term liability. Other information, share capital, reserve and surplus. Previous segment information as per Ind AS 108. What is this? Super easy. Means only you need to draw this. It was a tough question. Means I think because you have not written an exam, you might think it is a very simple question. Yes or no? Segment report of H Limited for the year ended 31st March 2023. First we write on external sale. So you can see external sale is what? This is 690. This is 170. This is 40. External sale. There only have written 690, 170, 40. Then inter-segment sale. This will be 500, 5 and nil. 500, 5 and nil. This becomes segment revenue. We can make a total. Then we need to reconcile with what? SOPL. So we will deduct what? Inter-segment sale. This becomes revenue as per SOPL. Remember the format. Then we write down results. So operating profit before tax. Operating profit before tax given. Interest expense need to be disclosed separately. So interest cost is given. We'll do segment wise. This become result. Segment result. Yes or no? From this we'll deduct head office expenses for reconciliation purpose. So you can see they have given allocated. This is to confuse you. Head office expenses cannot be allocated. So we'll make it total 4 plus 2 plus 2 8, and 8 will be only for reconciliation purpose. So it has been done for reconciliation purpose. This become profit as per SOPL because they have not given tax expense. We'll say this is only the profit as per SOPL. Then asset segment fixed asset is given. Segment net current asset is given. This become total segment asset. In this we'll add head office fixed asset, head office net current asset. This becomes total asset. All information given, only need to put. Then equity and liability. You need a segment liability. Then add head office liability. This becomes total segment. This is total liability. But you need to match with the total asset. We'll add share capital as well, reserve and surplus given in the last information. Share capital, reserve and surplus. This will match. Okay. They have not given any information about depreciation, amortization, that we can't disclose. They have not given any information about capital expenditure, that is not, we can't disclose. Correct. Then we need to also give some geographical information. You remember, in India, outside India. So external sale in India is 10 external sale, not total sale, not including inter-segment sale. So in India this month, outside India 890. Then we should also discuss segment asset. So because they have not given how much segment asset outside India, we will assume total segment asset is in India only. We have assumed total segment 61 is in India only. Check karo. I have assumed 61 is in India. This assumption I have taken. And so this become what? 8 marks answer. Is it tough? So you need to find out which question is easy. Why you waste your time in complicated question? I can understand one vendor question number 1 consolidation was 2 point where you might have struck, but proceed na, proceed. That least question was difficult. That 2 question thoda time taking. But apart from that, all question was easy only. Correct? Yes, sir. This also done. Then point number C, they have asked one question of what? This was a question of intangible asset. You need to calculate what? Carrying amount. This is also very easy. Beauty Limited purchase a patent right. This is also question from ICAI study material. Similar question is in ICAI study material. Patent of a face was on 1st April 2020 for rupees 4,20,000, which has a legal life of 10 years. Due to highly competitive nature of the product, the management of the company estimate a useful life of only 6 years. So you will take 10 years or 6 years? 6 years. This is totally bakwas. Straight line amortization is determined by the management to the best method. As on 1st April 2021, means at the beginning of the year, management is uncertain that a process can actually be made economically feasible and decide to write down the patent to an estimated market value of 2 lakh. My question to you all, they have this, just apply a common sense. They have said it will be write down to market value of 2 lakh. This is downward revaluation. Impairment as per India statistics. There are 2 things. Either we can do downward revaluation as per revaluation model, or there can be impairment loss as per India statistics. But what you will consider? This downward revaluation, this is impairment. Bolo. What is it? Downward revaluation ki impairment? Think logically. They have said it will be written down to an estimated market value of 2 lakh. We should consider downward revaluation ki impairment. Impairment. But for impairment, what you want? Recoverable amount. Whether they have given recoverable amount. Recoverable amount is value in use or fair value less cost of disposal. They have not given cost of disposal. They have given only fair value. And revaluation is done at fair value. So it means it is downward revaluation. This is not impairment. Correct now. However, it will not affect the solution. It will not affect the solution. Even though you are saying impairment loss, it will not affect the solution because your answer remains same. Because accounting treatment of downward revaluation impairment loss is more or less same. But presentation is different. Presentation is different. But they have not asked presentation in this question. Correct now. And also decide to amortize it over 2 years. Means the remaining useful life is 2 years. After that, remaining useful life is what? 2 years. As on 1st April 2002, having perfected a related production process, the asset is now appraised at a value of 3,50,000. Furthermore, the estimated useful life is now believed to be 3 more years. So remaining useful life is now 3 more years. Remaining life is what? 3 more years. Understood? You are required to determine the carrying amount as on these 3 years. Also discuss the treatment of they have given also revaluation gain in financial year. Are you getting? If you have considered this as impairment loss, then revaluation gain will not be adjusted. Are you getting? So they have said revaluation gain. Discuss the treatment of revaluation gain. Means it is a revaluation only. Actually, when I have read the question, I have not read this one. Today I am reading. I have done this and I have started solving. So I was not knowing that they have said revaluation gain. But if you have considered impairment loss now, some doubt might come. It is impairment or revaluation. So, initial cost is given 4,20,000. So they have done first revaluation here. So we will charge depreciation for how many years? 1 year. So amortization of 2021. based on what 6 year. So what we have done, 4,20,000 divided by 6. It is coming 7,000. So this is carrying amount at the beginning of the second year. Now it has been revalued at 2 lakh. So 3,50,000 minus 2 lakh. What is the revaluation loss? So revaluation loss will be debited to PL account. This will become revised carrying amount. This revised carrying amount will be now further amortized in how many years? 2 years, because remaining life is 2 years. So we have done 2 lakh divided by 2. So it become 1 lakh depreciation. This become carrying amount as on 31st March 2002. Now at the beginning of third year, once again revaluation done. Now they have said market price 3,50,000. We'll compare 1 lakh with 3,50,000. How much revaluation gain? Now revaluation gain will be first बताओ what will be treatment? Revaluation gain 2,50,000. Initially revaluation loss 1,50,000. It will first credited to PL to the extent of 1,50,000. Balance gain will be transferred to OCI as revaluation surplus. This you need to mention in exam solution because they have asked specifically. Even though I am not read, I have written rupees 1 lakh will be credited to 1,50,000. Oh, my mistake. I have done very fast now. And when I was doing, my child was with me in home. He was disturbing me a lot. 1,50,000 credited to PL and balance 1 lakh to what? OCI, revaluation surplus. Understood. This become 3,50,000 now, which will be further depreciated in how many years? 3 years. So divided by 3 we have done. This is coming. This is the carrying amount. Got. What is a difficult question? It was not a difficult question. This to 4 marks easy. This is lollipop 8 plus 4. In this chalo you have done some mistake about assumption. I don't know, but 50% marks you will get. Some suppose your assumption is wrong, but then also 50% so you can achieve. Not 8. It was totally easy. Understood what I am saying? बोल दे. Last question. Come to 6A. 6A. Diamond Limited is transitioning to India's, means it is a transition to India's. It is a question of India's 101. It has certain investment in Ruby Limited convertible debt instrument which are currently on the date of transition to India's exercisable and would provide Diamond Limited with controlling stake over Ruby Limited on exercise of conversion right. If you remember, we have done potential right. So potential right, if they are exercisable, means it is in the money and that can be exercised before meeting. So it becomes substantive and that should be considered for the calculating what? Control, yeah, power over investing. So what they are saying, Diamond Limited evaluated that Ruby Limited should be treated as subsidiary under India. So it is given the question. You are not supposed to analyze whether it is subsidiary or it is not a subsidiary. It is given the question. Hence, it would require consolidation in India's consolidated financial statement. Ruby Limited was not considered as a subsidiary or associate or a joint venture under previous GAAP. How should Ruby Limited be consolidated on transition to India? Assume that Diamond Limited has opted to avail the exemption from retrospective restatement of past business combination as per applicable India. I think if you remember, we will consider the date of transition to be deemed date of acquisition, and on the date of transition we will calculate goodwill or gain on bargain purchase as per Ind AS 103, taking all the assets and liability of subsidiary company from their opening Ind AS balance sheet on the same date by applying Ind AS 101 on the subsidiary balance sheet also. Correct? Understood? So that is the answer. I think I have given the same answer. 6A. Same answer is given. You can read if you want to read. चलेगा पढ़ लेना. Point number B. This was also थोड़ा सा new question, but common sense question. Poor Limited borrowed, नाम है Poor Limited बताओ. Borrowed 120 lakh from a scheduled bank. The term of loan are as under. Rate of interest 10% per annum payable yearly. Tenure of loan is 12 years. principal to be paid at the end of tenure is 12 years. At the end of tenure, that is 12 years. Who are limited defaulted in payment of interest in 5, 6, 7, 8 years. A loan reschedule agreement took place at the end of 9th year with the bank. As per the agreement, Poor Limited is required to pay 220 lakh at the end of 10th year. The default continued till the end of 10th year. You are required to calculate as per respective index book value of loan at the end of 10th year, additional amount to paid to the bank on account of rescheduling, assuming interest is compounded in case of default. So what was the date of at the end of 9th year? Modification was done. Modification was done. Correct. Understood. So guys, first we need to find out carrying amount at the end of 9th year. First we need to find out carrying amount at the end of 9th year. Let us calculate. That I have calculated. We can see calculation. That was the only first question they have asked. Calculate book value at the end of 10th year. But first we need to find out carrying amount at the end of 9th year. So 1 year, 9th year means यहाँ तक. Understood. So can you see no default up to 4th year. It will be 120 plus 12 minus 12, 120. Rate of interest was 10%, na? How much? 10%. So up to 4th year, so it will be 120. Then 120, 12. Now it will be compounded. And then you can calculate this at the end of 9th year. Understood. Now can you say we need to apply modification rule? We need to apply modification rule. What is the question? Question mark is 5 marks. Now modification rule says what? If the modified terms are substantially different from original term, then extinguishment accounting, otherwise modified accounting. And to compare the carrying amount this with the present value of modified cash flow at original discount rate. At original discount rate means that I have not given. Can you give me? Because we are into at the end of 9th year and this is 10th year. How much amount is payable at the end of 10th year? Is given. How much? 220. So this become new. This is a new cash flow. So can you give me the present value at original discount rate, that is 10% only? How much? 250 into 909, na? It is 227.25. We will compare with what? The carrying amount. Carrying amount is given how much? How much we calculated? How much we got? 193.26. So 193.26 compare 193.26. How much it is coming? It becomes 33.99. Understood? Correct. So this is A minus B. We need to find out 10% of B. So 10% of B is how much? 19.26. 19.26. So A minus B is more than what? 10% of B. It means it is what? Extinguishment accounting. It is an extinguishment accounting now. Now it means now we need to find out the new liability at fair value. We de-recognize old liability, but they have not asked this question. Means actually we should do that. If we read what they have asked, book value of loan at the end of 10th year. Additional amount to be paid to the bank on account of rescheduling. Assume interest compounded in case. Means from my point of view, and they have not given market rate of interest also, because fair value loan can be calculated by taking market rate of interest at 9th year. So it is not given. We'll assume 10% only. Just try to understand. But now whether we should do that or not, that I am not understood. Because question is silent regarding that. Once again, I will say drafting problem in the question. So also they should be given that market rate of interest was required. They should first ask what will be the accounting treatment on modification date. Then they should have asked what will be the means from my point of view it should be ninth year. They have given 10th year. Understood now? So what I am ignoring that part. I have ignored that part on the assumption that that was not an intention of the question. Because this is a question of 5 marks, how much you'll do? First point is that. So on that belief I have ignored. But if you want I can do that also. On taking some assumption that market rate of interest on that day is 10%, we can do that also. But let us ignore. So can you see this become book value? We'll once again calculate interest and this become book value of what? At the end of 10th year, we'll compare with the actual payment. This is the additional amount to pay. Means from my point of view, this was the intention of the question. From my point of view. So I have done in that way. Understood? Let's see what they are giving solution. So this solution might be different. My answer might be different from ICAI solution. If suppose they have taken modification then 9th year, so they will also take some assumption, then I can also do that type of solution. But for 5 marks, should we do that much? If they have not asked. That is the point of in exam hall, so how you will do? You react this only. So let us ignore that part. Happy? Okay, so if you have done this much, I think that is correct only and marks should be given. Now, point number C also, I think there is some drafting problem. So, whenever they draft a new question now, pata nahi, who is writing that question? They don't know how to write question. Sir, I forgot to write assumption for employee question. Dekho, if you have forgotten to write employee assumption, now it depends upon the examiner how they are treating your answer. So right now don't think anything, wait for exam result. Okay. But you should write assumption. Whenever you are taking assumption, every time we say in class, write assumption, write assumption, write assumption. Chalega. A shipping company is required by law to bring all. If your answer is as per ICAI solution, then assumption is not required. So I don't know what solution they are giving. If your solution is not as per ICAI solution, then you should write down assumption. So they will understand your assumption is different. Got this point? Jagan. A shipping company is required to bring all its ships into dry dock of every 5 years for a major inspection and overall. If you remember major inspection wala question, we have done. Overall expenditure might at first sight seem to be repair to the ship, but is actually a cost incurring getting the ship back into a seaworthy condition. Means it is a major inspection. As such, the cost must be capitalized. A ship that costs 40 crore with 20-year life must have a major overhaul every 5 years. The estimated cost of first overhaul is 10 crore. This is estimated, not actual, not actual. Means when you do adding, when you capitalize, so you will do capitalization based on estimation or actual. Means when you pass journal entry on when the expenditure is actually incurred, so when you do journal entry based on estimated amount or actual amount? Actual amount na rahi. When you are saying when actually the cost was incurred, so after 5 years actual cost will be incurred. So this is not actual cost. So this estimation is done when? This estimation is done when? Bata de. This estimation is done when? At the beginning only, na? Means at y0. At y0. Correct. So this estimated cost of first overall, what do you think? This is future value or current value? Please just try to understand what I want to say. This is what? Y0 and this is Y5. So one thing we have understood that we have done estimation that after 5 years how much expenditure will be incurred? 10 crore. 10 crore na. So my question to you, this 10 crore is the future value, the present value? Future value means I will also say future value. Correct. Understood. Correct. Now what they have asked, the depreciation charge for the first 5 years, the carrying amount at the end of 5th year. Okay, can I say carrying amount at the end of the 5th year, whether this estimated cost is relevant? No, because it will be incurred after 5 years. It means if you remember when we have done major inspection wala one question, I have said the initial cost will include some portion of major inspection. Means initial cost is what? Initial cost is how much? 40 crore. This will include some cost of major inspection or not? It means out of 40 crore, some cost belong to major inspection, and that will be amortized in how many years? 5 years. And this will be the balance will be amortized in how many years? What is the life? 20 years. But can I say we want the current price of this? We don't want estimated cost. We want estimated cost at current price. That is not given. So I have taken one assumption. It is estimated cost of first overall, which will be done after 5 years, is given at current price. Current price means at Y0. So can I say out of 40 crore, 10 crore is what? Major inspection cost. So 30 crore is what? The balance cost will apply component accounting for depreciation or amortization. So 30 crore is for 20-year amortization and 10 crore is what? 5-year amortization. Now I hope you have understood this point. So once again there is some what? Drafting problem. So in exam, so you need to understand the emotions of the question. So what? It has been assumed that estimated cost of first overall of 10 crore is based on current price. This assumption I have taken. Because if we will not take this assumption, then they have not given discount rate. So they should give discount rate. So we would have done present value, but in exam we can't estimate discount rate. In any question, I think never we have estimated discount rate. So better you assume it is at current price. Yes or no? Now 30 crore is for what? Balance sheet. Major inspection cost 10 crore. This will be amortized in how many years? 5 years. Totally amortized. This will be amortized in how many years? 20 years. So it will be 7.5 crore. This becomes carrying amount at the end of 50 years. So this solution I have done based on assumption. I don't know what ICAI will do for this question. How it will react, I don't know. They may take some other assumption. So we need to wait for the solution. So I have given best answer as per my suggestion. Understood? And I think you also agree with this. Whatever I have said, you are also agreeing, na? Correct, na? Okay. So this also done. 60, the last question is based on accounting estimate and accounting policy. This you can do, you can read by your own. This is a question of accounting estimate, whether it is an accounting estimate, it is not an accounting estimate, it is an accounting policy, or it is not an accounting policy. This you can read by your own. I think my help is not required in that. I think all questions, entire question paper I have discussed. Okay, na? Understood? What do you think? If you select question and do it, so from my point of view, this question number 1 was mandatory. Chalo, mandatory. But when you are doing this question number 1, so I always say that think about time. So maximum 30 to 35 minutes you can give. If you are taking beyond that, leave it. How much you have done? Simple. Then come back again to this question. This is smart work. Now you are putting 1.5 hours in this question. That is wrong. How much you can do in 30-35 minutes? That much you do. If you are taking more than that, I will say leave it. And if you are taking 1 hour in this one question, then it means you will not be able to complete the entire question. Chalo. One question it can be done. I will not say this was super easy, 8 marks, super easy. Count karo 8 marks. Once you count, This was super easy. This was a question of 6 marks, super easy question. This 6 marks super easy, so 20 marks to super easy. When initially the question paper came, so that time I have given a review of question paper. So with the mindset of the student, I was with the student. When the question paper came na, so everyone say complicated, complicated, complicated. So I am giving review because many persons message me, sir, give the review of the question paper. But when I have given the review, I say complicated paper, don't worry. Because if I say easy paper and you are thinking complicated, you will not write AFM. So at that point of time, I have not discussed anything. I said, yes, it is a lengthy paper, thoda complicated this time, hold your emotion, write AFM paper. Understood what I am saying? So if you see the review of my question paper, I said complicated, but now I am saying it was not complicated if you are smart enough to understand what to write, what not to write. Then this was complicated, 8 marks complicated, so the ignore, totally ignore. This was easy, super easy, 8. This was super easy, 4 marks. This was 14 marks. I will say, chalo theek hai, you have done some mistake because of EIR, but it was not tough. You can attempt it, 14 marks. So 10 marks so you can score na. Chalo 8 marks so you can score. और कर दो -2. चलो 6 marks you can score. 6 कर दो. 6 कर दो. Then this was super easy, 8 marks. If you have done as per assumption, whatever assumption you have taken. Then this was super easy, 8 marks. This was super easy, 4 marks. Correct. This 6A is super easy, 5 marks, but one question you have to leave. So let us assume one question you will leave. So 6A, suppose you have left. Because one question you have to leave now. How much marks happened? Huh? 58 marks, so easy only na. So if you are attempting 58 marks paper, which is easy, and then balance you can overwork. So 60 marks, 60 can be scored. If you hold your emotions. I'm not saying that you need to score 90 marks in this paper. But if you have attempted, you can easily score more than 60 or more than 50, which chalega. If everyone is saying toughest paper, toughest paper maybe we can score 50 marks. If you hold emotions with those questions which are scoring, then you need to identify in the exam hall which are scoring and which are not scoring. And time management. Got this? So we have done the entire discussion. Any doubt you can put in the comment box. Correct? Understood? If you are agreeing with my solution, then okay. If you are not agreeing with my solution, then also you can put some comment in the comment box. So of course it might happen. I have done some mistake because I am also doing for the first time. I am also human. I can also do some error. Correct? But from my point of view, okay only everything. But there can be some typo mistake, etc. Okay, sir. So for that, any mistake if I have done, so I am saying sorry for that initially only. Correct? Because this is only a suggestion given by me. Okay, thank you very much. We'll meet someday with some more video. Bye bye. Take care. Enjoy your remaining day. Bye bye.